Well, thanks for having me on. I think the key here is really starting with the health of the consumer. So when we think about the consumer, we do believe that she remains pretty strong right now. So coming out of COVID, there was about 2.1 trillion of excess savings that was accumulated during the pandemic. It's about 17,000 per household. And our strategy team at Raymond James estimates that only about 10% of this has been spent. So I think there's a lot of purchasing power in terms of dollars that can be deployed towards discretionary products. One of the questions that we get is where that spend is going, whether it's going towards services, things like travel and eating out, as opposed to buying goods. We ran a survey recently, and about 75% of the people that we surveyed plan to spend the same, if not more, on things to wear in the next 6 months versus year to date. So I think the purchase intent remains pretty strong here.
That said, JP Morgan just has some new data showing a 10% increase in consumers paying bills. It's up to 35%, which is the highest since the pandemic.
Yeah, I mean, look, inflation is going to be a macro overhang, right? That's not a new data point and in terms of that being a friction point, but we're focusing much more on the spending power. And I do believe that remains quite strong. And our survey work does support the notion that there's going to be there's an intent to spend more in the back half of the year.
For companies like Figs, we mentioned ThredUp, The RealReal, are they profitable?
So Figs is very much profitable. So we estimate that operating margins this year are going to be in the ballpark of 17.5%.
Wow.
And that's taking into account a lot of pressure that they have from air freight related to supply chain issues. And we have them going to about 20% next year. ThredUp is not profitable. We don't have them reaching profitability for another few years.
So if I was looking through these names, I mean, 80 to 90% declines are extraordinary. What do you think Figs should be worth versus where it's trading today?
Yeah, I mean, this is a company where we have a price target, that implies about 25% upside from where it is right now. And, at the end of the day, I think it boils down to execution and having a very strong rate of revenue growth. And we estimate that revenues are going to be growing at about a 25% CAGR over the next few years at least.
Okay, and Figs is trading at under $10 a share right now. It IPO'd around 20. So that's your strong buy. You have 6 outperforms, including Etsy, ThredUp, Rent the Runway, Market Performs, Overstock, and Poshmark. How many of these companies do you think survive as solo entities? And is there any possibility, we were speaking with Jan Niffen about this yesterday, could they end up being taken out by a Walmart, by an Amazon, by a Macy's, for instance, by each other?
Yeah, I mean, never say never when it comes to acquisitions, in this space. I think for a lot of these companies, their underlying fundamentals remain strong despite what valuations might be doing at this moment. When I think about a company like Figs, our price target is $15, and it's a very strong business. I think the bigger question is whether these companies want to be taken out at these depressed levels. So when you think about where valuations have come down, it's down about 55%. At these levels right now, close to trough versus where the average is. And so the question begs, do the founders want to sell at these levels, or would they rather wait for an organic improvement in the business if they really are confident about the long-term trajectory of their business?
Do they maintain control? I mean, is it going to be up to them?
Well, I think it depends on the company, but for the most part, some of the recent IPOs that have super voting rights in terms of where the founders' control is. So I think it's really under the founders' control whether they decide to sell or they want to wait it out.
Well, and that could make it harder for those who are hoping that consolidation would be a factor in the bull case. Nevertheless, Rick, thanks for coming on, digging into it a little bit for us. We appreciate it.
Thanks for having me.
Rick Patel today.